Well, good afternoon. Good afternoon and welcome. Welcome to another of our Webinar Wednesdays. It's great to be here with you live today again for the 22nd consecutive Wednesday. Good afternoon. I'm Kelly Bearden, and I'm the director of the CSUB Bakersfield Small Business Development Center. And today we're going to spend, as I say, our 22nd Wednesday in a row. The webinar series that the SBDC has presented goes back. Webinar Wednesday goes back to January 2013. We just didn't do them every Wednesday back then. So today it's kind of unique and special because I am not located live downtown in Bakersfield at our office at 17th and H. And I'm not at home. I'm actually on the road in Florence, Oregon. Florence, Oregon at the Old Time Inn. Very nice people. I had to ask them if I could do this webinar and extend past the checkout time of 11. They were very gracious, even though with the COVID-19 and everything else going on, it makes it difficult for them to rent the room tonight. So very happy. I did take a little bit of a road trip, for a wedding that we had planned before the pandemic, and it was on and off, and basically on. And so a road trip to the Panhandle of Idaho, and now on our way back, stopped and doing this webinar because that's what we do on Wednesday at noon. So congratulations to the happy couple, Mr. and Mrs. George, and a birthday greeting today to one August J. Pennington, who's celebrating probably more birthdays than he would prefer at this time. So we're going to go through a lot of information today. So on with the good part of the presentation. So we're part of America's SBDCs in all 50 states, located across the country, over 1,000 offices. We're part of the Central California SBDC region. What we kind of think is the best part of California, the Central California region, from the Pacific Ocean across to the Nevada border, encompassing going down to Kern County to the top of Mono County, the Central California SBDC region, 14 counties of Central Coast, San Joaquin Valley, Central and Southern Sierra, and of course the Great Eastern Sierra region. So thank you again for joining us. If you have any questions, contact the SBDCs in your area. There are 6 of us located, 6 different centers located throughout the 14 county region. Just a quick little word to our sponsors right there. We have various sponsors that have been very supportive and make this possible, as long as also with our free one-on-one consulting. So what's new today? Today, August 12th, 2020. Well, we're going to go over just a quick Kern Recovers PPP EIDL update. We're also going to talk about the presidential executive order and the stimulus that is yet to happen. We're going to talk about some PPP forgiveness, and we have some EIDL forgiveness, and we have an update, your questions, and a poll. And I'm going to do my best to get done at 1 o'clock today. So hopefully the small business here can rent this room tonight. So a little bit on Kern Recovers. You know that the Kern Recovers program has ended as far as the lending program. It is ended for now. What we're going to do is we're going to see if it occurs again. And in the next few weeks, we're going to start getting into some of the issues as far as the Kern Recovers loan forgiveness, in addition to talking about the PPP like we've been doing for so many weeks. So we'll get into some of the Kern Recovers, give people a chance to spend their money and start going that direction. The Kern Recovers PPE program, so free PPE, personal protection equipment, is still being delivered by the county of Kern. There's also still some going on in the eastern regions, Eastern Sierra regions, I know, in Inyo and Mono County, getting a little bit low there. But contact your local chambers of commerce there. You can go to the Kern Recovers website and find out more about the PPE program and how you can sign up to get a variety of different personal protection equipment for small businesses that have less than 200 full-time equivalent employees. The program's going to end the end of this month, at least it's been planned to end the end of this month unless it's extended. So your opportunity is really to kind of help your staff and your customers and to keep things safer and moving in the right direction as far as reducing this spread of COVID-19. So we're going to also today talk a little bit about the EIDL guidance. We had new EIDL guidance as it's kind of breaking news as it's associated with the PPP. And we will definitely get into that and cover that. 3 questions were answered that we'll go over, and how the EIDL kind of intertwines with the PPP process. We'll talk about EIDL approvals. They're still swift, since the portal's been going since 6/15. I've read some stuff in other publications that they're still having some issues with EIDL, and I'll be honest with you, quite frankly, I haven't heard much, and I haven't heard much of my colleagues mention anything throughout the 14 county Central California region. So yeah, for us, it's been going better. Again, if you're having a question with EIDL, we recommend that you look at the Fresno District SBA office Thursday, 11 a.m., EIDL reconsideration. And there's a lot more going on with EIDL. We'll touch on a little of that later on. PPP is now closed. It was not extended with what we had hoped would have been a stimulus package by that time. So what's next is that big fat question mark sitting right next to it. And also a little bit about a second PPP in question. So let's talk about today's guidance that we have. So today's guidance that actually came out, I believe, last night, breaking news as of this morning for me. And there were 3 questions that were asked regarding EIDL. And EIDL, the Economic Injury Disaster Loan, and how it affects the questions that came out. And you got to remember, a lot of this guidance is given toward lenders on particular issues and on how lenders should handle the forgiveness application and the forgiveness process. So if they seem like they're kind of geared, and they have in the past also been geared for lenders assisting with the PPP forgiveness form and process, that is why. So our first question that was which was issued and answered was, how should a lender handle any remaining balance on a PPP loan after SBA remits the forgiveness amount? And cutting down through the chase, you have the full question and answer that was submitted by Treasury today or yesterday. And so as of August the 11th, the lender is responsible for notifying you borrowers out there of the forgiveness amount that was remitted by SBA and the date of which the first loan payment will be due. And the repayment will be either 2 to 5 years, depending on that, if you got your PPP before or after June 5th. So that's kind of the first question having to do. So it's going to come from your lender as far as how much is owed. And remember, we've been through this several weeks, but your EIDL advance is actually going to not be forgiven and be part of the amount that's due for your particular PPP loan. So that's question number 1, moving right along. And if you have any other questions today, why don't you put your questions up in the question box today. We will do our best to have time and have an opportunity to go through those. And so put your questions up there, and we'll get to those as soon as we're done today. So the second bit of guidance that was offered regarding EIDL was, what should a lender do if a borrower received an EIDL advance in excess of their PPP loan? And we have seen some occurrences of that actually happening. It's not extraordinarily common. It's not common at all, but it does happen. And SBA thought it was important and Treasury to offer some guidance on how a lender should treat that particular transaction. So again, if a borrower received it in advance, they will not receive any forgiveness on the PPP loan because the amount of the EIDL advance is deducted from the PPP amount. So going numerically on that, giving you kind of a numbers answer. So let's say that we have a business out there that received a $10,000 EIDL. meaning you had 10 employees. But for whatever reason, the PPP amount was, let's say 6,000. So what'll happen on that particular situation is the $6,000 that you receive from the PPP, regardless of how you spent the money, will be considered actually a non-forgivable loan. So the $6,000 would be repaid. The good thing is you receive 10,000 EIDL advance, and that doesn't need to be repaid, but the full amount of the PPP would be, regardless of how you spend those particular monies. So I think that's good guidance, and I think that that's fair, because what it could have been issued is it could have been the larger amount that was actually the $6,000 of the PPP loan if it was spent within the proper parameters. Could have been the amount that was actually forgiven, and you would have owed the $10,000 as an EIDL loan or EIDL advance portion of that. So that's the second bit of guidance that we have. So if you have a PPP loan that is smaller than your EIDL, you do not have to pay the larger of the two. You'll be paying the smaller PPP amount. Okay. Guidance number 3, where'd you go? Okay, number 3. Actually skipped over this one. So this one has to do with actually when you go through the process of filing for forgiveness. On the forgiveness forms that we've gone over, and maybe we'll look at a little bit today, there's an amount that you put in there for your EIDL advance amount. So if you received an EIDL advance, again, that part will not be forgiven and will be included in the amount due either at that time, or it can actually be paid over the 2 to 5 year term. So lenders were wondering how they would be able to know that amount and how they would be able to be certain that the amount that the borrower is telling them is the amount that would actually be actually reimbursed by SBA. So in this bit of guidance, the SBA came back and said that the lender will be able to confirm the amount of the EIDL advance that will be automatically deducted by SBA from the forgiveness payment by reviewing the EIDL advance information in the PPP forgiveness platform. So digitally, that information will be able to be accessible to the borrower, and they will be able to go in and they will be able to see the guidance and to actually get into the PPP forgiveness platform like they will do for all of their loans that go through this at this time, and be able to see that particular amount. So got really excited when I saw that we had more PPP guidance coming early this morning, but that's the only 3 pieces of new information that we have for today. So, and we can go into a little bit about those in a bit. So last week we talked a lot about stimulus leading up to, which happened to be a non-event last couple of weeks. We talked about potentially there being some stimulus by August the 7th, and actually we'll even share that slide. Here was our slide that we shared last week on a second PPP. We were anticipating about $190 billion, which is still possible. We were under the impression that there was bilingual partisan support. Okay, not bilingual, bipartisan support, although that would have been interesting. Now we're under the impression that there were still some differences in, even though a second PPP does have bipartisan support. Last week, we were kind of under the impression that it would be a 50% reduction in revenue. The employees would be 100 or less that an employer could have. And we speculated on who might receive a second PPP, what industries were significantly damaged, and so forth, and what a small business should do. So this week, what we've learned is that, the funding still could be about the same. There are differences, and Now, at least from the amendment to the Republican proposal, that you can only have to document a 35% increase in revenue, and that employers could go up less than 300. So maybe this is what's bringing on a little bit more of the wider discussion and things that are going on in that particular issue. And of course, it's probably being tied to a lot of the bigger issues that are going on in some of the areas, as unemployment in other areas, state and local support, etc. So if this happens, that could be a wider group that receives the second PPP, and the industries again could be about the same. So the differences between the two on a second PPP, you see kind of the differences, but really going down to kind of the differences in the Republican and the Democratic positions there. And but really the last part of it was really the part that opened my eyes, is Democrats also want more money for the economic injury disaster loan. So there could be a separate initiative, and there could be additional funds that are coming in. As we looked at it last week, there was still about $240 billion that were in EIDL through the rest of this year. And last week, if you recall, if you were on, we speculated about there being more of a actual potential for the ceiling to be lifted. Do recall that at first we had a ceiling of $500,000 for larger small businesses that were impacted significantly by the disaster. The amount kind of shrank when the money started running out to about $350,000. We had a number of clients that received that maximum $350,000 amount. And then the vast majority have been down around the area of $150,000 as far as a maximum. That for many small businesses is enough to probably carry them through the disaster, but there are some bigger small businesses that they were really hoping to get to $350,000 or $500,000. So if there is more money in there, it could go on both sides of that. It could go to enhance and to build that 150 up to potentially 350 again, or 500. Or what could happen is it could be a smaller amount also that kind of opens it up, because if you recall, the EIDL program was not as easy to get as the PPP program, and there were a lot of issues that we will potentially get into another day if there looks to be funding for this particular program increase. So we didn't get a stimulus, but we did get a presidential order, a presidential executive order. And many of you, I'm sure, heard this, and it hit on 4 areas, and we'll touch on these briefly. The main one, at least from my perspective, is number 2, deferring the payroll tax through 2020. And we'll get into that in a little bit more detail in a second. But it does, for most Americans, they're probably concerned about extending the federal unemployment benefit, and for many of our small businesses that felt for that $600 per week, in addition to what they received from the states, was providing too much of a disincentive for them to return to work, and the businesses couldn't open. So the presidential order, it will extend that, reduce that to $400 a week from the $600. The federal government will pay $300 of that per week. And the states are expected to come up with another 25% or $100 a week for each of those affected individuals, of which many have said that that would be difficult, if not impossible, to do. There were some numbers out on the last unemployment, federal unemployment. We've given you a lot of numbers on PPP and EIDL. So, hey, we'll throw some numbers out on federal unemployment. When it expired on July 31st, the total aggregate benefit was about $250 billion. So that is probably why there's been some discussion on that particular issue now, and the amount. Not the fact that it's needed, but the amount and reasons why. So we talked a little bit, and we'll talk a little more about deferring the payroll tax through 2020. Suspend interest payments on federal student loans. And that's currently in place right now till September 30th, but that would get extended. And then a call for an extension to the current eviction ban, and specifically asking Health and Human Services and the uh, Center for Disease Control to reconsider an existing ban that's going on. So let's start with federal unemployment. Pretty much everything we said originally holds true here. Extend that unemployment benefit. Defer or pause the payroll tax. Now, if this is going to become more of an issue, because we're still kind of on the fence seeing what's going to happen with stimulus and what's going to happen with many of these presidential orders. So like many of you, we're in a holding pattern. It would only affect the Social Security portion of the payroll tax. So the Medicare provision, which is an additional 1.45%, would not apply. It's a benefit that would greatly affect individuals that are working, that already have jobs, and make less than $104,000 per year, which is around the shutoff for the payroll tax. So defer, pay, or pause the payroll tax. What it amounts to is that employers would stop collecting Social Security, for many workers, then that would add a certain amount to each paycheck for the rest of this year. He would like it to start on September 1st and going through the end of the year. The kicker on all this is, as of now, it doesn't change how much tax employers and employees actually will owe. So it could be just a deferral, or it could be a stop. But really, if it came down to be an amount that didn't have to be repaid later on, that is a decision that only Congress can make at this time. So that's kind of where that controversy is coming in around the payroll tax issue. And it's going to require additional guidance from the Treasury. We know how that's like. This would be from the IRS section of the Treasury and how it would actually play out. And also, there's a number of larger employers. There might be an option for a lot of people to opt out and say, we're not going to offer our employees a tax deferral if it's just a deferral of payroll taxes. So that whole legal issue needs to be decided, and that's going to kind of be interesting how that goes. So then there's the call for the extension for the current eviction ban. Again, I don't know if it considers both residential properties for individuals, personal, or if it also includes commercial. But it would extend that and prevent renters from eviction. So a lot of this stuff is still unfolding, but that's kind of the breakdown of what's happened in the last week and kind of where we are at this point, kind of moving forward. And then also the student interest and payments on federal student loans. And again, that does not eliminate any existing debt. What it does is it just suspends the interest and payment principles and payments. And so we've already had, and we've talked about like SBA loans where the government will step in and actually pay that amount as part of the CARES Act. So a lot of this stuff, we're still kind of wading through seeing if it is an actual deferral that you have to just get at it and pay back, or if some of that is going to be eliminated as far as a particular payment or an interest portion of that. So as they like to say, stay tuned. So, this is the slide that I think we had the last couple of weeks, very similar. What was going on with stimulus? What's the timeline? We didn't anticipate anything before August the 7th, but now it's August the 12th and we still don't have anything. And we knew that the differences were going to between the parties was going to be fiercely negotiated. And there is a perfect example of that now that we're at August 12th. And the different sizes that they want and the different differences that we won't get into. And again, we had our favorites of small business. We had our blanket PPP forgiveness, and that was, of course, hoping that loans under 150,000 would be automatically forgiven. And lenders also hope for that because if you recall, it's something like 86% of the over 5 million PPP loans, while it's only about 25% of the revenue of the little over 500 billion that was spent on PPP. So they also want to try to see about the income tax situation. Here it says mess. I'll call it a situation right now. And that is the non-taxability of the proceeds for the PPP. But again, your expenditures are not going to be tax deductible expenditures. And so there's going to be a little bit of a difference in both your net income from a tax perspective and from an accounting perspective. And so that's kind of where the mess comes from. I think we heard last week that people will resoundingly want a PPP, a PPP2, and a modified pandemic version of the 7A loan. And we talked about that, potentially a working capital line of 100 billion that would also maybe serve underserved markets, which is probably very vitally needed as we went over the statistics last week for those that had received PPP. And so that was kind of like some of the favorites that we were looking at last week. Okay, if under the better late than never category, let's do our poll. You thought I was going to forget about that, huh? And actually, the poll question, at least the first one, is going to start with forgiveness. And then the second one is going to be part of actually the presentation and the new documents that we've learned from the EIDL and PPP new guidance from last night. So let's do our first poll. And again, this is one we asked a little while back, and we were a little more optimistic that it was going to happen faster. But it is, I hope to finish my forgiveness application by, well, last week we learned it could be 10 months. You can actually go 10 months after you use the proceeds. You hope to finish your process, though, by August, maybe in September or October now, or November, December. So bid it up. I know that I've heard talk to people who have ran into problems that have a fiscal year ending June 30th, and they really kind of want to get it wrapped up. We've got about a third of you voted at this time, and the leader is the September, October. A lot of you still hope to wrap it up by the end of the month. 10 months appeals to a few of you out there, but not too many. And then later in the year, but vote again. We're up to about 52% of you that have voted. So what we're going to do is we're going to close this poll, and we'll share the results with you. And as you see, nearly half of you hope to wrap it up by September, October, with another 27%, another little more than a quarter in August, about 20% of you in November and December, and a handful say, hey, yeah, they're giving me 10 months, and I'm going to have the whole doggone thing forgiven. I might as well just take care of it then. So the only thing that this could come into play, and I'm going to give a little analysis on this poll question, is that what happens is potentially you have the opportunity to manage this beyond greater means with having 24 weeks instead of the initial 8 weeks. Electing a 24-week window could actually drag this out if it's in your interest, and some of the guidance that comes later on changes that or reflects that. And I'm going to share with that, hold that thought, I'll share with that later on in my example in the Excel spreadsheet. So that's number one poll question. And this one is just a little simple poll question. It's part of the guidance. Simple yes or no. And let's read it. Do payments required for the provision of health group policy, and that's healthcare benefits, include vision and dental benefits? So this is in PPP forgiveness. You notice we have we've been talking about group health care and about how the employer portion is payable, but they came out with guidance and I thought, hey, let's make it a pop quiz. So we have about 20% of you in, and this is PPP forgiveness. So under that provision, it said group health care benefits. Now, did those benefits include vision and dental, or was it just the medical portion that was qualifying for forgiveness? And we have about a third of you that have voted. And now, now that I explained the question, it makes it a little easier, a little more difficult. So, vision and dental. And right now, we were at a dead heat while ago, but now we have a clear winner that looks like it's going to come forward. We're going to give you just another couple of seconds to complete if you haven't done this already. But again, group health care benefits, do they include vision and dental benefits for forgiveness? Let's end it. And let's share this poll for you. 54% of you say yes, that in addition to medical care, vision and dental benefits qualify. And 46% of you say no. The correct answer is yes. Something that we had been asking for several weeks. Can it include dental and vision? And the actual guidance came out as the one question of PPP that wasn't related to EIDL. And there it is. Good to know. Okay. So we have that poll closed. And what we're going to do is try to close this thing and move on. Okay, so moving on, a little bit more on forgiveness. The last couple days, big banks have came out and said when they anticipate. Now that we all know when you want to have your PPP forgiveness completed, a couple of the big banks came out and said that right now Wells Fargo doesn't know. They're still waiting on additional guidance, as we all are. But most of it's in now from SBA regarding forgiveness and confirm a date. And JP Morgan Chase and Company, which was by far, well, not by far, but it was the single largest processor of PPP loans, said they wouldn't have their portal up till late August or early September. And our lesson on this is that, and I won't get into the numbers, we could have gone through PPP numbers like we've done in the past, but if anything, I'm going to be as brief as I can. But, essentially there were over 5 million loans and over $500 billion that was committed for the PPP program. And JP Chase Morgan was the largest single processor, did the most. But the fact is there are over 5,000 lenders. And I know the people that we have out there today, we have literally dozens of different lenders. So stay in contact with your bank, with your lender, be it a big bank, a community lender, a credit union, an online lender, or somebody else, and follow up with them on when they expect to have the portal open. 2 weeks ago, we had a local lender, Mission Bank was on, and they actually mentioned that they were going to get theirs going and beta test some very soon. So each lender has got their own criteria and their own method of doing things. And so check with your lender, follow them, and that will help you with that particular aspect of it. How did cash flow get in there? Well, cash flow did get in there. And as many of you know, that's not an unusual situation. So let's go to actually start sharing some of the other things that we have to share with you today. And that being mostly we're going to share the Excel spreadsheet But just real quick, let's run through this again. This is what we shared last week when it came out, the guidance on PPP. And just a couple of things I want to spend a little more time on than we were able to last week. And I've highlighted them, such as question 3. If you submit the timely loan application, I just wanted to make sure everybody knows you do not have to make any payments. And now with former guidance today, you will be notified when your first payment will be due. And then again, of course, that first says the 10-month period. So you do have 10 months from the completion of your covered period or your alternative covered period to actually do that. A few of the other things real quick. We had talked for, I believe, several sessions about cost. Payroll costs can be incurred or be paid during your period. So if your window was before a certain date and you incurred the cost, but then you got your PPP and paid them after you received it in your covered period, yes, you can do that. And the same thing as if you incur the cost and it runs toward the end of it. We've covered that quite a bit, I think. We've got with guidance in the past, but they wanted to spell that out especially clear. The other thing, we've had a lot of questions about if you could pay your employees over the last 22 weeks, or probably 20, what type of payroll costs could you use in addition to paying your hourly or salary amounts? You can include tips, commissions, bonuses, and hazard pay as long as you don't exceed the $100,000 level on an annual basis. So again, just a reminder, you can use different forms. Again, also, and we'll get into this, we'll get in our example coming up, is that group health care benefits. A lot of us, in my example, I'll be showing you, I used the premium. I got a premium from the health insurance company. I put it in my plan to seek forgiveness, but I had an employee share of that in the health care premium, and that is not allowed. Same thing with retirement. If there's any copay for retirement in there, it needs to come out as well. Any other things we wanted to really touch on? Of course, there's the 10,833 that we knew several weeks ago across all lines of business in which he or she has an ownership stake. And then there's more detail on all the various. We shipped this out to you last week. It's out there. We can do it again if we need to. One of these, this is really something we didn't really talk about much, but I thought it was kind of a great question and a great bit of guidance that came along. And that was the fact that the alternative payroll period was created to create convenience for particular borrowers, where you could align your payroll period with your payroll expenses. So that was something that was done for the alternative payroll covered period. But with their guidance, SBA and Treasury came out and said the alternative payroll period only applies to payroll cost and not non-payroll cost. So your covered period is going to be used for your other expenditures, such as utilities, rent, and other allowable expenditures that can be forgiven. So that is very important to note, that you could be using a different period. You could use, if you elect, an alternative period for your payroll cost, but you have to use your covered period for your non-payroll expenditures. One of the other things that came out that was interesting was the payment of interest on unsecured debt. So we knew that if you had modified a lease or a particular, if you modified real estate or property on a lease, but also if your loan is an unsecured loan, that is not eligible for business interest under the other example that we showed. And then, of course, transportation cost. We were getting mixed feelings on transportation cost. Many of you, particularly those in the trucking business, for example, were hoping to be able to use the utility for maybe some fuel and other things, and we found out that that is not the case, that it is just for the transmission fees and some of the others fees that are on there, the transportation of, say, electricity or gas, that is oftentimes stated separately on a electricity or gas bill. And then some of the other things, just to reiterate a little bit and maybe provide a little more detail from last week. We talked about the 12-week period that is an election for seasonal employers. And that was kind of an issue that came up and a big deal. The first question here, now we're getting into, again, the FTEs. And really, when I listen to Wells Fargo want more guidance, I still think a lot of this is there still needs to be a little bit more guidance on the FTE portion. You do recall that we do have almost the blanket exemption for businesses that were impacted, significantly impacted. That their businesses, and our classic example in the past has been salons and restaurants. You can use almost the blanket exemption on that in order to follow the safe harbor rules that have come out. But for those that don't, there's still a little bit of question, and there's still a little bit of indecisiveness maybe, about where to go with that particular guidance and how that's going to work. So FTEs, probably more final guidance coming. And a lot of what came out last time was stuff that we had already covered. Okay, let's stop that, and let's get our by the numbers up here and give you a little bit of an example of some of the things that we've learned in the last week or 10 days. Oh, cash flow. That's not what you want to see. That's okay. Beating a dead horse here. Trying to share you the Excel spreadsheet. And that's what wants to come up from Excel. So thank you for being patient. Let me just kind of go over what's included in this package. And of course, as we've done in the past, we've identified the week of the webinar, the PPP. This is PPP 22 by the numbers. We last went through examples of this back in week 18. So there's some new stuff in here and stuff that's been removed and other things. But here's the text of the FAQs. We just put it right in there. So that is the FAQ guidance that came out either late yesterday afternoon for me, early this morning. And then the next tab at the bottom, and you notice I'm just tabbing across the bottom of the Excel spreadsheet. And this was just a lot of the PPP changes that were made after the first guidance, such as allowing 24 weeks to use the funds, 60%. So just to be clear on there, reducing the length of the forgiveness forms and adding the EZ application, etc. And we had incurred or pay rule down there. This is a strategic election because you still have an opportunity to use 8 or 24 weeks. And this was just our little example of why you might elect 8 or 24 weeks. Covered it about 8 or 10 weeks ago. So this is just kind of a refresher if you want that information. We have 3 scenarios, and we have a different scenario this week. We've had Kelly's Grill Forever. We've had Mom and Pop, which is an example of a business with 0 employees, on how it would work with the sole proprietor kind of aspect of it. But now we've added Fred's seasonal business in here. And what we did with Fred was we just put in the revenue and the payroll expenditures. And what we did with Fred was we just used the example of that particular payroll period. And this was one of the questions, if you recall. We had a 12-week period from May 1st to September 15th that you could be used to calculate your PPP loan amount. If you elected and used that, the guidance was you also had to come back and use the same 12-week period for reference for calculation of any reduction in the amount of loan forgiveness. So that would be the FTE requirement of the same specific time and dates. And this was again to come up with our loan amounts and the amount of our forgiveness that we're hoping to obtain if we're looking at 100% forgiveness. So the one thing that you did see a lot of over the last several weeks is our plan. We have that in here in a blank version if you haven't seen it before, but it's been our tracking plan as far as trying to manage the PPP program through this process of extraordinary change and difficulty. And just going through here, I'm going to pop in a couple of things. This was our plan. And our plan originally, if you recall, we went out 14 weeks and we were planning to use the money then. We got to reopen as part of a dine-in restaurant, and so we decided to take it under our actual. Here's our actual, the same thing, but this is the actual amount that we were planning. So a couple things that came up with the new guidance here. You know, again, we have one that's a KG plan. This tab is KG actual. We moved the expenditures up because we wanted to end this period here because we had our FTEs that were actually available at that time. We had met the FTE requirement for this restaurant, which we probably would have over the various safe harbor. And if you want to go back and look at some of these, go to our YouTube page, CSUB for California State University, Bakersfield, SBDC, Small Business Development Center, and that is our YouTube page. And they're all there, every webinar. So with this one, the big key points here are going to be these three items, at least today. And as you see, and we're going to concentrate on this one, which is going to be focused on health insurance benefits. As you see here that our health insurance benefits went down to about 4,200. We were paying 4,200s. And you know, in our actual, that was our actual premium. So now what we need to do is we need to go in, because we've received guidance on this now that is different than we might have thought about. And for some of you, it could be down here on transportation, and it could be up here on retirement. So in this particular example, what we did was we had $4,200 of health insurance benefits. Well, we had a copay for our employees that was $1,000 per period. Let's just use that $1,000. So now I need to go back into my actual here as I'm doing and update that for 3,200 because I'm not going to get forgiveness on the full 4,200. And this happened during 3 months or 3 periods. So now what has happened, I have now $3,000 remaining if I go up here to my remaining PPP proceeds. And so I can still expend that during later periods if I want, or maybe I could go back and look at other expenditures, or maybe I can manage my business differently. Maybe if my business is low on PPPs, FTEs, the full-time equivalents, and I wanted to try to entice some people back to work that didn't come back to work. Maybe they were afraid of COVID. Maybe they got it. Maybe they had family members who lived with elderly people. Maybe they liked the unemployment. Wide variety of reasons. I can offer a bonus now and put a bonus in there. Now, I would have to extend this out longer period of time, and I really wouldn't officially end it till later unless I had some other expenditures in here that I could use. Maybe I could go back and say, well, you know, I only took a very small portion of the employer paid retirement amount. Maybe it's higher. Maybe there's utilities that I could have claimed over here the first week in the month. Look, there's almost $3,000 in utilities if I look right there. So there's ways to manage that now that we have additional guidance on these particular issues and on kind of doing this entire thing. This whole thing evolves. Just because the expenditure happened anytime during the 24-week covered period or alternative covered period for payroll expenses, I can go back and use it at any time. It's really important to know. And I could shift the differences as long as, remember, these periods here could be for an alternative period. I elected it to be the same. from April 20th to October the 4th. But down here, it's only for those periods, October 20th to the 4th. Okay? So I might have to go back and look at this and make sure that now that I've received additional guidance, that this is the case here. And maybe what I do is I just go over and I just say, well, you know, I could, in my particular case, I want to still end it on the 7th of July. And I go back and look at my electricity. Remember, I opened and my electricity bill was $1,600. And potentially my gas bill was, oh, let's say 800. And my water and sewer were 650, but I only have $600 left. I claim that amount there, and bingo, I'm back to my proceeds. So just managing your PPP based on the information as it changes and with additional guidance. Now, maybe many of you only took or many only planned the employer paid retirement portion of that, but that would oftentimes be different if you had any employee copay. Okay? Going through this again, the rest of this, and for those of you that we'll just send this out individually to everybody. You could, you know, you could delete it if you want or not use it or whatever, but we'll do what we've done in the past and we'll send this one form since it does have the guidance, the new guidance, the different scenario for the seasonal businesses electing that 12-week period. There's our forgiveness form that really, I don't think has really changed a great deal. Some of the other forms, the weekly payroll if you want it, PPP form, schedule form A, which was really important with our Kelly's Grill example. And forgiveness for 24 weeks. There's your blank form if you don't have one. Oh, doggone it, there's another cash flow forecast. It's raining cash flow forecasts. And that's what we have there for you today. Okay, let's get to your questions. 12:52. Got time for 8 minutes worth of questions and make the hotel people very happy with me for their kind generosity here in Florence. So stop this share. We'll get back with you on the questions and answers. And of course, okay. Questions. And I did receive some questions from you as well that I'm going to try to pull up first. Okay. Questions first. And these were the ones emailed in. I'm trying to get better getting all the email questions in. So if you have an email question for me next week. Okay, this says the EIDL website seems to indicate the EIDL loans can be refinanced and converted to PPP. Do I understand this correctly? Well, I think what you're saying is that the EIDL advance loan can be included in your PPP and actually financed through the PPP. So that is true with the advance. It is not true with the EIDL loan, or nor would you want to, even though it would be a cheaper interest rate. But I haven't heard anything about anybody being able to refinance a EIDL loan with its own loan agreement. That would just be the EIDL advance portion that is going to be processed through the PPP forgiveness form anyway. The status of PPP, we talked a little bit about that. About it is now closed. We'll see if it opens up again and in what state. PPP versus PUE. The unemployment, the pandemic unemployment insurance. If someone is on PUA and gets a PPP, could they halt the PUA, or how do they manage that? You know, what I would do with that is you have a 24-week period. If you have the PP, I would not want to run a PPP concurrently with a PUA, just because I personally think that there's going to be guidance that comes down from Treasury or SBA saying that if you have an employee cannot receive both the PPP or the PUA. Maybe it's already happened. Maybe it's already in the rules, and I just have not fully engulfed. I just am taking the logical, the way that I think the law is intended to pay for someone under 1 weekly period. But if one is more, you could, if you get paid more under PPP than PUA, I think they could be managed due to the length of the windows of both of those. Can I pay a partner from payroll money on a Kern Recovers loan? That is an excellent question. And I am going to find that out for you next week. And also what we're going to do is we're going to start looking into the forgiveness program process for the Kern Recovers loan. And we'll try to get some of that information to you as we go. Can I pay the principal on my mortgage from the working capital? I would think that yes, for the Kern Recovers, you could do that. Okay, that's the questions that came in early. Now going back to the questions that we have up here. Okay. Is workers' comp insurance forgivable? I do not believe it is. It is not. Nothing has came out to say the only tax that we have been able to see so far, and I know it's an insurance and not a tax, but only state unemployment insurance and some of the state taxes that an employer pays would be actually under that. Okay, there's questions on the FTE, and we didn't get into that a great deal today. If you have 3 FTEs, can you round up? There are 2 formulas of how you can actually go through the FTE process. And one is strictly a 20-hour is 0.5, a 40-hour is 0.4. But you can also go into the exact amount that employee works. If they work a 30-hour work week, well, then that's a 0.75, 75% of a 40-hour work week. And if that helps you up there, you will not probably be able to round up from 2.5 to 3, but as we say, we still expect more guidance on that as we move on down. Yes, we will be sending out the copies and everything. Okay, I am a sole proprietor, no employees, receive PPP May 8th. Taking it 100% yourself, which is what I think about everybody is doing in that particular situation. You're waiting on PUA. Again, I think I just answered this. I think that is trying to manage between a sole proprietor who is receiving PPP and also PUA. And all I can say is you're lucky. I was self-employed during the last recession. I picked the wrong recession or the wrong recession to be working and to be self-employed. But I think it can be managed. And I think that that's the key there is I think you can manage the particular 24-week period and how you use it anyway, which way, shape or form. We still don't have clear guidance on what's going on with PUA, so I would go that way. As a business owner on payroll, am I eligible for PPP proceeds? That's a question that I got to answer with a big if. It depends on how you set it up. If you are a business owner in, say, an LLC, it's pretty straightforward. Yes, you're paid like a regular one of your employees. If you're a sole proprietorship and you do your taxes on Schedule C, then oftentimes that needed to be done ahead of time. That had to be done in the process on the amount that you were eligible for your PPP proceeds and kind of processed that way. So, I would say pretty much it depends on how it was set up initially. Your bank will be the one that actually signs off on that. So that would be really one of the things that you do in that regard. Hey, gonna get out of here on time for a change. It's 1 o'clock, and it's been fun again. Number 22 is in the can. What we'll do is we'll send out the spreadsheet to everyone this week, maybe a copy of this particular program if you want to go through it, the version of it. 1 o'clock, we're getting out here on time. I'm Kelly Bearden for the CSUB SBDC. Have a great day. We'll see you next week. Bye-bye, everybody.